and welcome. Thank you all for joining us during the Lytham Partner Fall 2022 Investor Conference. My name is Robert Breza, Vice President of Lytham Partners. During this presentation, we welcome Julian Letterman, Director of Corporate Development from Nano Dimension, ticker symbol NNDM on the NASDAQ. Today, I've asked the company to briefly run through the slide presentation, and then we'll engage in a fireside chat, like a Q&A session. Before we begin, those not familiar with Lytham Partners is one of the country's leading investment relation firms with more than 2 decades of corporate access experience. We've built one of the industry's most diverse and effective platforms for connecting small cap companies with high quality and focused institutional investors, while creating a framework of best practices in all aspects of investor relations. Today's presentation is hopefully another example where we can bring value to multiple constituents. Before we begin, one final item, I'd like to remind everyone that Nano Dimensions is available for one-on-one meetings later this week. If you have not already signed up, please send me an email at Breza, B-R-E-Z-A, @lythampartners.com or visit www.lythampartners.com/virtual and click on the one-on-one meeting request button. With that said, let me now turn the presentation over to Julian Letterman of Nano Dimension. Please go ahead.
Thank you, Robert, and thank you everyone to the investor community for listening in and watching in here. As Robert mentioned, my name is Julian Letterman. I'm the head of corporate development and investor relations at Nano Dimension, which is an extremely exciting role. I've been at the firm, just for some context, for about 18 months, and it's been nothing short of an adventure, and it's been great to work with our investors so far and hopefully more investors into the future. As Robert mentioned, I also want to reiterate, we look forward to any one-on-one engagements. I would encourage you to sign up. I'll almost certainly be with our chairman and CEO, Yoav Stern, who I'm sure you'll find will shed some interesting light on the business today and where he wants to take it into the future. So with that said, I'll kick off. This will be high level, but again, we would welcome more questions from Robert in the Q&A or from yourselves in the one-on-ones. So we'll cut right to it. This is what we do. We'll zoom in right away. We make all of these advanced AI-led manufacturing solutions. And we also make the materials that go into making these advanced solutions, the materials that they're printing with and making products with, that is. This is ultimately for the use and development and production of high-performance electrical and mechanical devices. So to put it simply, we make some of the most advanced equipment in the world that helps make the most advanced applications and products in the world, both electrical and mechanical. Of course, there's a lot that goes into making these, and we'll touch on that, but at the end of the day, this is what's going out of our door, and this is what's going to over 2,000 customers that we have served. Now, after zooming in, we'll take a step back. What is our vision? I think it's nothing short of very ambitious, but we think very doable. We are transforming additively manufactured electronics, AME, and I'll refer to that term more than once. Additively manufactured electronics, or AME, and precision additive manufacturing, or AM, by delivering a complete Industry 4.0 solution. And this is our bedrock. AM, additive manufacturing, some of you may know it as 3D printing, but we are doing it with a very strong focus on electronics and precision. There are many others in the broader AM space, very few, if any, in the electronics and precision space to the degree that we are. But more on our vision is about transforming digital designs into functioning electric and mechanical devices. And what this means is we see no reason that something can't go from an idea to a design in a computer to manufactured far, far more easily and less friction than what we see in the world today. And we're already starting to do it and show traction doing it. And very importantly is we're doing it on demand, anytime and anywhere. And why this is so transformative is we're disrupting manufacturing. What has taken weeks and months can now take days or even less, on demand, anytime, anywhere. And this is really built on the idea of a cloud manufacturing service and distributed manufacturing, all connected, learning from itself to advance manufacturing in a way that has not been done. We are very much at the center of Industry 4.0, and this is a once-in-a-generation multidisciplinary event, and we'll see what that means. A bit of historical context for those who don't know. There's been arguably, by most consensus, 3 industrial revolutions up until now. One was, very basic about mechanization, steam power. The second about electricity, mass production, the assembly line. And third, from the 60s or so, is about digitization, basic computing, some basic automation. But what we've really ushered into is the 4th industrial revolution. And this is where we say it's multidisciplinary. It's about big data, it's about additive manufacturing, of course, robotics, cloud, IoT, cybersecurity. Some of these are manufacturing themselves. Some of them enable greater manufacturing, and we are very much at the center of all of this. What does this look like? What does this future of manufacturing look like? This is what we're helping support. You have the world here, the world we know today. You'll have different design centers, manufacturing centers distributed throughout the world, connected with cloud computing, advanced with AI, and able to connect designing to manufacturing to distribution in a way that the world is starting to see, but the best days are ahead. And just imagine how transformative this has been and will continue to be in a world that is dominated by the challenges that we're all existing in a post-COVID world, and arguably in some instances will get exacerbated. And this future of manufacturing very much is oriented around that, and we are at the center of it. So how are we at the center? We first start with AI, and we did a notable acquisition in this space. I'll come to that later, but AI is at the foundation of everything that we do. Why? Manufacturing is perfect for it. Very highly repeatable processes, lots of sensors. This is perfect. Troves and troves of data. And we're using AI in an area that has been very hardware or mechanical engineering focused to advance manufacturing to the next stage. Again, we'll touch more on this. Where are we applying this? Additive manufacturing, which has been our foundation since we started almost 10 years ago. Pushing it into robotics, an area that we've pushed into with our M&A activities. Again, we'll touch more on this. On material science, which is arguably the foundation of anyone who's going to be successful at additive manufacturing, is material science. Software brings it all together. Security, IP security, cybersecurity, these are tantamount in the manufacturing world that we're living in and increasingly going into. And then, of course, is actually something that a value add, if anything, but is ESG, particularly around environmental sustainability. We're going to go into all of these more, but it's this multidisciplinary aspect that really is the hallmark of Industry 4.0 and is the hallmark of Nano Dimension and what we're building. So what is this unique technology? We've touched on them before. I've listed them: deep learning, additive manufacturing, specialized robotics, software. This is our core business. This is what we do. These are our products. These are our services. If you want to know more about the company, I mentioned we started almost 10 years ago. We have 500 team members, about half of which are in R&D, mechatronics, AI, other areas of that nature. As Robert mentioned, listed on the NASDAQ, very liquid, 3 million shares trading per day. And as an indication of our technology leadership, patents actually granted, I want to emphasize granted, 60. So a tremendous amount of IP in-house that in many ways secures our business for the longer term, and something I'd be happy to touch on. The opportunity, and we'll build out all these points, but we're a business that is growing over the last 3 years, taking our run rate this year into consideration, growing almost 300% CAGR, tremendous growth. And then one of our greatest attributes, our competitive advantages, a fundamental of the company, is $1.2 billion in cash and cash equivalents on our balance sheet. This enables us to do many things, which we'll touch on. But one of the greatest things that enables us to do is to not be bound by choosing between one thing or the other. We can do many things in parallel, and we are doing that. We're serving a market which is large and growing. Will grow 6 times between now and the end of the decade. So this is to say that we are serving a market that's very favorable to us. The winds are behind us, and this is powering what we're doing, and this is really driving the receptibility by our customers. And if it's any evidence is more key, it is how many customers do you have? Where do you have traction? How much do you have traction? And we do have traction with over 2,000 customers who are using one or a few of our solutions. So it's just proving the validity of what we're doing. So to talk about our investment highlights, we are built for today's and tomorrow's challenges. These are supply chain disruptions, sustainability, making custom-made parts for many people. These are all things which are already important, but increasingly important. These are big industry issues, business issues, even societal issues. Very strong fundamentals, touched on it before, $1.2 billion in capital, equal to 14 times our annual OPEX. So just proving that we have the cash to do what we need to do and go the distance. Proven growth, close to 300% CAGR over the last 3 years, and a business development strategy in large part thanks to our capital. We don't have to choose between R&D and go to market or M&A. We're doing all three in very robust ways at the same time. We do have a very proven track record working with some of the key industries that you'd imagine: aerospace and defense, automotives, electronics and PCB, industrial, medical, and R&D and academia. These are all our partners working closely with us on our systems, solutions, challenging us, pushing us to advance and provide better. The point is, these are key high-end customers that need the best and need all the levers of our product and service: IP security, supply chain security, sustainability, all the things I mentioned to date. These are what they come to us for. These, you'll see on our presentation online, are some of the testimonials which are proving the validity of our service. The new world, just to make it tangible again and get out of the abstract, this is the world of old, or at least the world that we're moving away from: vast, dirty, energy-using floors, and we're moving to a manufacturing that will just have a few of these. In another term, we call it a factory in a box, and that's all what we're trying to do. It's a massive feat, but it's this type of manufacturing that is the manufacturing of the future. When we look at synergies, to go look at our product portfolio, we have additive manufacturing. We have a suite of printers there. We complement it with robotics that we're both integrating into our printers, but also running in parallel. Materials, I mentioned before, is the core of 3D printing, and then software, which enables one to go from design to manufacturing. The way that you're designing for other services, maybe in your personal life, manufacturers, designers will be manufacturing at that same ease. Dive deeping into these a bit. AI is the focus of everything we do. It is our flagship acquisition, the first one we did. It's all about driving better design, improve yield, improve throughput. In the printing space, in the electronic space, I should say, we have AME, our additively manufactured electronics printer, and Dragonfly. We complement it with the robotics that enables vertical integration of electronics manufacturing. And then we have a printing technology system that helps control our electronics, our printed electronics, to enable it to be as high resolution as it is. To give you some sense, we're down to micron resolution. Micron, if that means anything to you, is the size of a corona germ, if you will, if that means anything to you. We're also making these solutions that help make precision parts. We do this through a suite of additive manufacturing solutions that are working with multi-materials, ceramics, plastic, metal, and work at very small sizes from single millimeters to several centimeters or inches. And we complement it with injection molding that actually works synergistically with them. Our roadmap, many milestones per year, advancing AI in meaningful ways, and we're breaking through each of these milestones every year on track. The key thing to consider is as we get through each milestone, we're actually increasing the addressable market. And you can see here the addressable market, as alluded to before, will be over $100 billion in ability to sell our equipment and sell our solutions. And we're pushing into larger and larger markets every single year. ESG leadership, something very profound and needed and close to, I would say, as an employee, close to my heart. We're taking manufacturing that is quite dirty, energy intensive, water intensive, waste intensive, and we're reducing it almost close to 100% on all the key metrics. This cannot be underestimated enough in how important this is, and increasingly how important it is from our customers. Some flagship Fortune 500 customers are coming to us in some part, not only based on technical issues, but in large part based on sustainability. The market size, touched on it before, but will grow close to 6 times by the end of the decade. So the wind is behind us in serving a larger and larger market. Revenue, to give you a sense, the business has grown considerably year over year from 20 to 2021. This, I think, for many companies would be respectable growth. We have increased this many times over. This year, we're on a run rate of 43 million, and we anticipate our future growth will be significantly higher in realizing our M&A synergies and additional M&A. Our business development is 3-pronged: M&A and investments. We've done 5 investments and 5 acquisitions and a strategic investment in Stratasys. We're very much focused on synergistic technologies and synergistic go-to-markets, selling to the same types of end customers. Multi-gen R&D, several R&D programs at the same time, and building a go-to-market platform that allows us to distribute our technology and other technologies through acquisition and our solutions through this to the same customer, or at least the same type of customers. This enables scale. I'll wrap up shortly, but a very quick overview of the organization. We're operating out of Israel, Germany, Netherlands, Switzerland, the UK, the US, and some presence in Australia and Hong Kong. The organization, over 500 employees, almost 50% of which are R&D, 35 data scientists specifically focused on AI. And lastly, a leadership team that is very experienced, many of whom have been CEOs themselves at other organizations several times over. This is an organization with significant resources, but the leadership and talent to guide it most effectively. With that, thank you for your time. Robert, I'd be happy to answer any questions. And reminder, we look forward to meeting with investors on behalf of our chairman and CEO. He will be there next week, one-on-one.
Julian, thank you very much for the overview. Let's expand on a few topics here. You talked a lot about the go-to-market strategy. At a high level, can you help people understand how the machines are sold today? Do you have a direct sales force, lean on partners? How are these machines actually sold to the end customer? Thanks.
Thank you. Thanks for the question. It's a good one. So because we're selling such sophisticated systems, we very much focus almost an entire part on direct sales. We want to be as close to our customer as possible. These systems are very nuanced. They require a lot of sophistication, and our customers are also sophisticated, and putting a type of partner in the middle, I don't want to say we're against it, but it doesn't serve anyone's interest, particularly our customers first and foremost.
That makes perfect sense. Can you talk about, obviously, you have great growth plans out there with the go-to-market strategy, with the direct sales force. Can you walk us through what maybe your target model is in terms of maybe where we should think about gross margins, maybe 3 to 5 years out, or operating margins? How should we think about that relative to the balance sheet, which is enormous with significant cash of 1.3 plus billion on the balance sheet today? I think you can correct me if I'm wrong, but fantastic that we don't normally see in the small cap world such a large cash balance with no debt. Can you just walk us through that target model?
Yeah, of course. And I might even go down the income statement a little bit too, because I think that matters to our investors. We want to say that we are mindful not just of gross margin, but ultimately the bottom line. On the gross margin question, we are focusing around 60% gross margin. That is a key part of our business model. But when we're talking about getting to the bottom line, if it wasn't for us investing in R&D as much as we are, we could turn profitable. We would be positive on the bottom line. This is a choice of where we are now, and we're very much committed to spending around $50 million per year for the next 3 or so years, because that is really about securing our business and getting our products to the place where we think they can actually absolutely dominate the market. With that said, we believe at the end of that time, 4 or so years thereafter, according to our model, and that's something we're very prudently focused on, we will be delivering to our shareholders a positive bottom line.
That's great. Fantastic. You talked about some of the different verticals a little bit. Can you walk us through like the verticals as it relates to the automotive industries, the aero defense, government. Is there one vertical that dominates today outside of electronic per se?
Sure. Well, I don't want to be too misleading here or not try to answer your question, but it is defense, and that's the direct answer to your question. Exactly who, because of our customers, it is hard to tell, but I could say it is several of the multi-billion-dollar defense companies that you would expect. It is, in terms of armies, or call it Ministry or Department of Defense, it is the armies of the four countries which you would probably expect. And when we're talking about national security agencies or secret intelligence type of services, it is the four or so agencies that you would also expect.
Sure, that's great. When you think about the competitive advantage, really, that the machines are able to introduce into this manufacturing process, it would appear to me to be almost a easy to sell type from an ROI perspective. What has been maybe the most quickest payback you've seen from your customer use cases, or can you maybe walk us through a couple of customer use cases where you've seen dramatic improvements, or what those improvements are?
Sure. So I don't want to butcher the Thomas Edison quote, but he has an idea about innovation and failure, and the idea that you can innovate so much quicker, not because you get to the end immediately, but because you fail quicker, the iterative innovation cycles. And that enables you to take something that could take 3 weeks, 4 weeks, not to mention the IP security that you're putting your designs at, you now can do in a print that could take 24 hours or even less sometimes. And the fact that you can make a design, fail fast, iterate, re-innovate, redesign, go through that cycle faster, allows you to do everything faster, go to market faster, get to production faster. And this actually has real financial consequences. If you take how much money you make per day once you get that product on the market, but if you can bring that in 6 months or 9 months, just imagine how much increased revenue, and in some instances savings, you could have. That's just only on the dimension of how fast you can iterate and develop and prototype. But I could give, of course, examples with more time around IP security and sustainability and the like.
Maybe pulling it back to a big picture question, as you look around the world today, obviously there's concerns definitely from a defense perspective for national security, et cetera. We, at least on the America side, tend to see people wanting to retrench and bring manufacturing back to the US, away from China, to speed up new product innovation, but also to protect their interests from an intellectual property perspective. With that phenomenon, and just maybe the state of the economy and the worrisome that investors are under today, what have you seen from a CapEx spending perspective as it relates to your customers? Obviously, defense contracting, we know, is probably on the increase. There's probably not a contraction from a CapEx perspective there. But we'd love to just get your idea as you're talking to your sales force, hearing what are they seeing on the economy in terms of any delays in CapEx budgets, et cetera. We'd love to just get your perspective.
I think overall, it's been very strong on the CapEx expenditures, defense, auto, the key industries. Of course, there has been, I don't want to sell it short, there's been some challenges in the way of Ukraine and some geopolitics, which has, I would say, not stopped things, but rather delayed things. But even as the geopolitical situation is not to say it gets perfect, but in some aspects gets better, we're seeing the quote unquote floodgates reopen and a catch-up effect. Sure. Where what the spending that would have happened over the last 4 or so months is coming back, and is coming back in a very serious way. And in some areas, the issues are just getting re-emphasized, where if you didn't get the memo about the need to take care of your supply chain and reshore in light of COVID, I think Sure. You definitely got the memo in light of Ukraine, the geopolitics that are unfolding there. So again, this actually only further increases the trends that are, or the tides that are really supporting our sector and particularly our business.
That's great. I mean, would love to just understand from a maybe product breakdown perspective. In the beginning, you spoke to being I'm going to call it vertically integrated from the machine to the consumables to the products. Can you help us dissect that a little bit? Is like I know in the slides you talk about the percentage as it relates to the consumable portion of the revenues. Can you help me understand maybe what is the maintenance stream associated with owning a machine and all the software that's in it? I would assume there's a maintenance component to that product.
Yeah, so it depends on the customer, but of course we're selling systems. That is one revenue stream. That is a big, notable upfront cost, and the systems ranging from about $250,000 to $450,000. Of course, some exceptions to that on the margins, depends on the product. Then we sell consumables on a regular basis, and regular basis could be every few months, but put in every year. Customers are regularly buying consumables, and consumables, for those who don't know, it's effectively the ink. It's
Sure.
A printer like your printer at home. It's the ink, whether it's polymer, ceramic, metal, whatever it may be. We are selling the consumables. And then as you touched on, Robert, is the service aspect. We service our machines on a continual basis. This is to say, in short, we have a razor blade type business model, which I think our investors have historically appreciated, and gives us, when you're talking about a system that may have a lifetime of 5 or more years, gives us a strong lifetime revenue source.
That's great. I want to thank Julian very much here for your time today. We greatly appreciate it. We're going to end the conversation. To anyone out there that has not already signed up for a one-on-one, again, please send me an email at Breza at Lytham Partners. It's BREZA at lythampartners.com, or click on www.lythampartners.com/virtual and click on the one-on-one meeting request button. With that, we hope you enjoy the conference. Thank you, Julian. Thank you, everybody, for joining us.
Thank you, Robert.